This is another podcast from Alpha Business Media.
Welcome back to the deep dive. Each time we get together, we dig into a whole stack of sources to really get under the skin of a topic and hopefully give you that shortcut to being genuinely well-informed. Today, we're looking at a place you might not immediately think of as a fintech hotspot. We're talking about Nepal.
That's right. A country facing, significant geographical hurdles, economic challenges.
Exactly. And yet, it's somehow becoming a leader in financial technology. Fintech. So our mission today, to explore how fintech in Nepal isn't just about, convenience. It's actually a critical tool for national development. It's about trying to connect every single citizen to the formal economy. And to make this real, let me tell you about Jyoti Baniya. She's 33, a poultry farmer in the Syangja district. After getting some digital literacy training, she moved her farm's finances completely online. And listen to what she said. This really struck me. I feel much more at ease because I no longer have to handle cash. It has taken a huge burden off my shoulders.
Wow. Yeah. That single quote, it just captures this quiet but really powerful revolution happening there.
It really does. And Nepal is such a fascinating case study because of those challenges. You've got the incredibly rugged mountains, the socio-economic issues. It's one of the poorest countries in South Asia.
Right.
But the innovation we're seeing, it holds this promise of reaching everyone. The farmer on the flat Terai plains, the entrepreneur in some remote mountain village. It's about building financial inclusion from the ground up in really tough conditions. There are lessons there for lots of places.
Okay, so let's unpack this a bit.
Yeah.
Before this fintech revolution kicked off, what was the actual landscape like? What were these deep-rooted problems that made traditional banking just not work for so many people?
Well, the core issue was pervasive financial exclusion. Nepal is overwhelmingly rural, and you had over 20% of the population below the poverty line, even higher, over 25% in those rural areas.
Yeah.
And the geography, those mountains, they just made building physical bank branches incredibly expensive, sometimes almost impossible. So millions were effectively cut off.
You just physically couldn't get to a bank.
Exactly. And the numbers show this stark divide. In Kathmandu, you had something like 3,296 accounts per 1,000 people.
Wow, that's high.
It is. But compare that to rural municipalities. Just 251 accounts per 1,000.
Huge difference.
Massive. And you saw provincial disparities, too. Places like Madhesh and Karnali had far fewer branches compared to, say, Bagmati province, where Kathmandu is. Traditional banking just couldn't bridge that gap.
And what about the gender dimension? Was that a factor too?
Oh, absolutely. A huge factor. There's a deep gender gap. Women were historically excluded. For every 1,000 women, there were only about 687 bank accounts. For men, 1,314. Nearly double.
Right.
And for rural women, it was even starker. Just 201 accounts per 1,000.
So why was that? What were the roots of that exclusion?
A lot of it is sociocultural. Women traditionally own far fewer assets, only about 17% of rural assets like land, which banks typically want as collateral for loans.
Okay, so no collateral, no loan from a traditional bank.
Pretty much. And that forced something like 90% of women-owned businesses to turn to informal lenders, money lenders charging exorbitant rates, which of course holds back not just those women, but their entire communities.
Okay, but here's where it gets really interesting, I think. The government actually did try to address the access issue, right? They pushed banks to open branches everywhere.
They did. They mandated branches in almost all 753 local government areas. And, the number of accounts did go up, but, and this is the crucial part, about a third of those accounts, 33.6%, were basically dormant, inactive.
Right. So people opened them, maybe because they had to or was encouraged, but then they just sat there.
Exactly. It highlights this critical difference between just having access to an account and actively using it.
So why weren't people using them?
Well, a few key things. Financial literacy was, and still is, relatively low average, around 57.9%. So banking felt complicated, intimidating for many. Plus, think about it. If you live in a rural area, the time and money it takes to travel to a bank branch just to deposit a small amount or pay a bill, it often wasn't worth it, especially for the kind of microtransactions people do every day.
Okay, so there was this sort of vacuum. Accounts existed, but they weren't useful day to day.
Precisely. And that vacuum was the perfect breeding ground for fintech. Digital wallets didn't need to persuade people to open an account. The government had sort of done that groundwork.
You just needed to make the accounts useful.
Exactly. Add that layer of convenience, turn that passive account into something active, useful, right there in your pocket on your phone. That's a really key insight, I think.
And the results since then have been, pretty staggering in less than a decade. Let me just throw out some numbers from our sources so you get the scale.
Yeah, the numbers are striking.
Adult account ownership, 33.8% in 2014, jumps to around 81% by 2022.
Massive leap.
Women managing accounts, 31% in 2014, up to 50% by 2021. Digital payment users, 9.9% in 2014, up to 28.6% in 2021.
Still room to grow there, but a big increase.
And this one mobile wallet users, basically none in 2014 to 18.9 million by 2023.
Almost 19 million. That really tells the story of the wallet revolution.
So how did that happen? How did Nepal manage to put a digital wallet in seemingly almost every pocket? What was the magic ingredient for digital payments?
Well, it started with the pioneers. You had eSewa, which launched way back in 2009, Nepal's first digital wallet.
Right, eSewa.
And then Kulti, which came a bit later, but really gained traction with its very user-friendly interface.
Okay. And what did they let people do initially?
The basics, really. Paying electricity, water, internet bills, mobile top-ups, that was huge. Buying movie tickets, plane tickets, eventually some online shopping, the everyday essentials.
So getting people to trust it in a society total dominated by cash must have been tough.
Oh, absolutely. It was a major hurdle. So these companies, they didn't just launch an app. They invested heavily in education. They ran campaigns, offered cash back, bonuses, anything to build trust and overcome that initial skepticism. It was as much about changing behavior as it was about the tech.
And then came QR codes. That seems to have exploded even faster. What drove that incredible growth? Nearly 200% in a year, you mentioned.
Yeah, the QR growth was phenomenal. A big push came from the Nepal Rastra Bank, the central bank, with their whole Less Cash Society initiative.
Okay.
But the real secret sauce, I'd argue, was interoperability. Instead of every wallet having its own QR code that only worked with that specific app.
Which would be a nightmare for merchants.
Exactly, a nightmare. Nepal avoided that fragmentation. You had key players like PhonePe stepping up. Think of them like the operating system connecting different banks and wallets, making sure they could all talk to each other through a single QR.
Ah, okay. So one code works for multiple apps.
Precisely. Oh. And then you had the national standard, Nickel Pay QR, guided by the central bank. That standardization, that interoperability, that was the absolute game changer. It made it easy for merchants, easy for users.
And now you see them everywhere, right? Tea stalls, souvenir shops.
Everywhere. Kathmandu, Pokhara, you name it. And crucially, PhonePe also enabled integration with India's UPI system. That's huge for cross-border payments, for trade, for tourism. Interoperability is key.
But tech alone, especially in remote areas, isn't always enough.
Yeah.
You mentioned this human bridge idea.
Yeah.
The agent networks. How important were they?
Oh, vital. Absolutely critical. You had initiatives like ESOA's Cash Points and Culti's Puzzles. These weren't just places to cash in or cash out. Yeah. They were the last mile. These agents, often local shopkeepers, became trusted guides. They were the ones actually teaching people how to use the apps, answering their questions, calming their fears about this new digital stuff.
Building that crucial trust face to face.
Exactly. They were the human face of digital finance in communities where trust is everything. Yeah. You can't just drop an app and expect adoption. You need that human element, especially early on.
So it sounds like this public-private partnership was really firing on all cylinders. The central bank setting the rules, private companies innovating on top.
Yeah, that synergy was powerful. Yeah. The NRB, the central bank, created that level playing field with things like Nepal QR and the national payment switch. That provided the foundational rails.
Okay.
And then companies like PhonePe built the services on those rails, connecting everyone. This massively lowered the barrier for merchants. I mean, look at the numbers, 282,000 QR codes in 2021. By early 2024, 2.34 million.
Wow.
And yeah, the COVID-19 pandemic definitely accelerated things, pushing people towards contactless payments. But the foundation was already there.
And the critical outcome of all this, every payment leaves a digital trace.
Bingo. Every cup of tea bought with QR, every bill paid online, it creates a data point, a digital transaction history. And that history becomes the foundation for the next big leap, digital lending.
Right, lending. Shift gears there. How has fintech started opening up access to loans for people who were just completely shut out of the traditional banking system before?
Well, first, it's important to remember Nepal already had a rich history of microfinance before fintech really arrived.
Okay, like what?
You had the classic microfinance institutions, the MFIs, often using the Grameen Bank model, group lending, social collateral, not necessarily physical assets.
Right, group guarantees.
Exactly. And you also had savings and loans cooperatives, SECs, where community members pool savings and lend to each other, plus self-help groups, SHGs, similar community-based efforts efforts.
So there was already a culture of small loans and saving in communities.
Yes, absolutely. These organizations were crucial in providing small loans, especially to women and rural populations, and fostering that culture of financial discipline and mutual support. They laid important groundwork.
Okay, so where does digital lending fit into that? What was the big breakthrough?
The digital breakthrough really came with platforms like Phone Alone. This wasn't a separate app initially, but a feature integrated into existing bank mobile apps.
Ah, okay. Makes it easier to access.
Right. And it offered instant, small, short-term loans, sort of like payday loans without needing collateral, without paperwork, without visiting a bank. Initially, it was targeted more towards salaried customers whose income banks could verify easily.
But still, a huge shift from the traditional
A
models.
fundamental shift from face-to-face group meetings and physical collateral to something data-driven, incredibly fast and convenient. It really turned the old lending model on its head for those who could access it.
It's easy to talk about platforms, but can you share some examples of the real impact this access to capital, whether traditional microfinance or digital, is having on people's lives?
Yeah, absolutely. Let's look at Chandra Kantagimeyer. He'd worked abroad in Saudi Arabia, came back, got a loan from an MFI called Sana Kisan Bikas Lakabita to expand his buffalo farm. His income now is apparently 10 times what he earned overseas.
Wow, incredible.
Right. Or think about the women entrepreneurs using cooperative loans. They're getting up to 1.5 million rupees, maybe $11,200 or so, to start beauty salons, agri-supply stores. There's even a rice mill entirely owned and run by women, funded this way.
Fantastic.
And another example, Poj Bahadur Tamang. He used funds for integrated organic farming, focusing on off-season vegetables, which fetch higher prices. It gave him a much more stable, higher income. These aren't just loans, they're investments in grassroots entrepreneurship.
So it feels like these different models, the traditional MFIs, the cooperatives, and the new digital lending, they're not necessarily competing, but maybe converging.
That's exactly the right way to think about it. Digital isn't replacing traditional microfinance, it's complementing it, enhancing it. Traditional MFIs have that deep local trust and understanding,
Right.
right?
The community connection.
But their processes can be slow, paper-based, costly. Digital lenders are fast, but initially focused on those with existing data trails. The magic is happening where they meet. MFIs are starting to use digital tools for applications, for loan disbursement, for repayments, makes them more efficient. And digital lenders, especially using AI and machine learning, are getting much better at analyzing alternative data.
Alternative data, like what?
Like someone's history using a digital wallet like Isera or Culti, their record of paying utility bills on time, maybe even remittance patterns, money sent home from abroad.
Ah, so using everyday digital activity as a proxy for creditworthiness.
Precisely. This data becomes a new form of digital collateral. It allows lenders to build a credit profile for someone who has no formal banking history, no land title to offer. That farmer paying suppliers via QR, that woman receiving remittances digitally, their actions create data that unlocks formal credit.
That's the path to really scaling inclusion for people who are economically active but locked out of the old system.
Exactly. The unbanked but economically active. It's redefining what collateral means.
Okay, so pulling this all together, if you look at the whole Nepalese fintech ecosystem we've discussed, can you quickly map out the key players and their specific roles again?
Sure. So you've got the digital wallets like eSoa and Culti. They're the front end for everyday payments, building that crucial digital transaction history. Culti also seems focused on services for businesses and women entrepreneurs.
Right, the payment service providers, PSPs.
Then you have PhonePe, the payment system operator, or PSO. They're the crucial connector, ensuring that QR payments work across all different wallets and banks. Interoperability.
The glue holding it together.
Kind of, yeah. And underpinning that is Nepal Pay QR, the national standard set by the central bank, ensuring security and compatibility for the whole system.
Okay.
And finally, you have the digital lending piece, exemplified by Phone Alone, delivering those instant, often collateral-free loans directly through mobile banking apps.
So it's this whole interconnected system, payments, interoperability, standards, and lending, all working together.
That's the picture. Each piece enables the next.
But despite all this incredible progress, the journey isn't over. What are the big hurdles Nepal still needs to overcome for full financial digitalization?
Well, a major one is what you could call the double divide, digital and financial literacy. We mentioned the average financial literacy is under 60%.
Hmm.
People often don't understand complex products.
Right.
And that's compounded by low digital literacy, especially in rural areas among older people.
Hmm.
This breeds fear, mistrust of technology they don't understand.
Makes sense. What else?
Basic infrastructure is still a challenge in some remote regions. You need reliable internet, stable electricity for digital services to work consistently.
Sure.
And maybe the biggest underlying factor is trust. It's a fragile thing. Concerns about data security, privacy, the risk of fraud, these can really deter people, especially new users. One big negative incident could really set things back.
So the central bank, the NRB, they must be walking a tightrope here, trying to encourage innovation but also protect people.
Absolutely. It's a classic regulator's dilemma. You want to foster innovation, let new ideas flourish. So they've done good things like the Digital Finance Innovation Hub, the planned regulatory sandbox where companies can test things safely.
That sounds positive.
It is. But on the other hand, they have to ensure financial stability and protect consumers. If regulations are too strict, say really low limits on transaction amounts, it can backfire. It might just push people back towards using cash because it's easier, less restricted. It's a very delicate balance.
If you had to pick the single biggest long-term threat to this whole fintech success story in Nepal, what would it be?
For me, it comes back to that issue of trust. The erosion of trust. The whole system depends on users believing their money is safe, their data is protected.
And as it grows, it becomes a bigger target.
Exactly, a bigger target for cyber attacks. And users with low digital literacy are, frankly, easier targets for phishing scams, for fraud. One major data breach, one large-scale fraud incident that gets a lot of publicity. It could seriously damage public confidence, especially among those who are starting to dip their toes into digital finance.
So what's the defense against that?
It has to be multi-pronged. Constant investment in cybersecurity by the platforms, robust data protection laws and enforcement, and critically, ongoing public education campaigns to help people recognize risks and protect themselves. It's not just a tech issue. It's about building sustainable digital citizenship.
Looking outwards now, how do global experts see Nepal's journey? Do they see this potential you've described?
They do. People like Neil Cross, who used to head innovation at DBS Bank, and Emmanuel Daniel, a well-known financial analyst, they see Nepal having this unique chance to actually leapfrog development stages.
Leapfrog. How so?
Well, unlike many Western countries burdened with old, clunky legacy banking systems that are hard to change.
Right, the old infrastructure.
Nepal doesn't have that same weight. It can potentially skip some of those slower incremental steps and jump straight to more advanced, mobile-first, even AI-driven financial services. They can build something modern and tailored from a relatively cleaner slate. That's a potentially huge advantage.
That's a really exciting prospect. So thinking about securing that future, what would you say are the absolute key pillars Nepal needs to focus on?
I think it boils down to three core things. First, technologies. This means really embracing things like artificial intelligence, using it smartly for better credit scoring, personalizing services for users, managing risk more effectively.
Okay, tech is one.
Second, culture. This has two sides. Fostering a culture of continuous innovation within the banks and fintech companies themselves. But just as importantly, building and maintaining that culture of trust and confidence among the wider population.
Technology and culture. What's the third?
Third is cooperation, strengthening those partnerships we talked about. Between the regulator, the NRB, the private sector innovators like Isewa, PhonePe, Kalti, Phone Alone, and also international organizations like the IFC or World Bank that can bring expertise and funding, everyone pulling in the same direction.
Technology, culture, cooperation. That makes a lot of sense. Well, this has been a fascinating look at an incredible transformation from a situation of really deep financial exclusion, rooted in geography and social factors. Nepal is genuinely paving a path towards a much more connected, inclusive economy through fintech. It really shows you how innovation can tackle fundamental development challenges.
It really does. And I think it's important to remember the real benchmark for success here isn't just the transaction volumes or the number of apps. It's about whether this shift genuinely empowers people like Jyoti Baniya, the poultry farmer we started with.
Right.
Does it help rural farmers, women entrepreneurs, small shopkeepers build more secure, more prosperous lives? That's the ultimate goal, not just a digital Nepal, but a financially accessible Nepal for everyone.
So a final thought for you, our listeners. As you go about your day, maybe paying for coffee with your phone or checking your balance online, think about your own digital footprint. How might that data, your transactions, your online activity, be used in the future? Could it become a new way to access financial opportunities, perhaps without needing traditional collateral? What new kinds of digital collateral might we see emerge, not just in Nepal, but maybe closer to home too? Something to ponder.